What's going on, guys? It's Maximus Trades back with another video today. So today is our model series episode 2. So we're just continuing on where I got show you guys my model that got me funded at 16 years old with the 50K tops at eval. If you guys haven't seen the first episode where I fully go down in depth and break down my entire model, I strongly recommend you do that. But today's I'm gonna still go over the model, and going into the new year I've kind of updated some things that I'll quickly go over. But overall, it's very much the same model, very much the same kind of concepts and strategy, and I have them listed out here for you. But we're gonna quickly go over them, quickly go over some changes, some adjustments from last episode, and this is like a fresh $1 million. Just back to I meant to do 100,000. I made a mistake. It's $1 million. Back testing cow mounts. We ended up unfortunately losing our old one from the model series episode 1, which is like a while ago, like 3 weeks ago. But it's fine. We can just work on this one. So, yeah, let's hop right into the strategy itself. So, if you guys haven't seen the first one, I strongly recommend you do that. It'll make a lot more sense if you watch the first one because I kind of break down the concepts, but we'll just quickly go over them. So, the first thing I look for is a key level being hit on the high time frame chart. So, that could be like your 4 hour, 1 hour high or low, a session high or low, or a new week opening gap or a daily opening gap or whatever it might be. So, a lot of unfilled gaps I target as well. So, any of those kind of key levels where liquidity, or in other words orders, are being filled or set is levels I look at. So the first thing I want to see is a key level getting hit. For example, a 4 hour high getting hit. At this point, like, my immediate thinking is like a sweep. I was thinking that kind of fashion, that 4 hour high is being hit. It could be like a resistance level. Like, I don't really trade at all support and resistance, but that's just kind of my fundamental thinking. Like, I'm looking for shorts from that position. And at this point, I'm really just looking for any type of liquidity to be swept at the high time frames. And then what really kind of gives me my bias is when I look for a 5 minute confirmation, right? So that can be an inverse fair value gap or SMT. So that's our step two, a 5 minute confirmation. And obviously, when I say my bias, my daily bias is really redundant. It just depends on, the macro of that day, or we're looking at the higher time frames. Normally, if we're trading in like a five minute fair value gap, it's obviously going to be a bullish fair value gap on the high time frames are obviously gonna have a bullish bias, stuff like that. But really kind of gives you my incentive for the like my true bias for the day is this 5 minute confirmation. So if I say, like, going back to my previous example, we have a 4 hour high getting hit, I'm looking for shorts just off second nature is what I think, right? And we have a 5 minute confirmation being an inversion of a fair value gap. That gives me like an inversion of a bullish fair value gap, which gives me strong, bearish incentive. And something I wanted to point out is I kind of like, since I used lots of confluence, I prioritized which ones I think are stronger than the others based on my own experience the last couple of months and back testing and trading these strategies in the live markets. I do believe inversion of fair value gap is a much stronger influence, confluence, than SMT. So if I have a bearish SMT, it's still good. I'll still use that, but I'd rather prefer a 5 minute bearish inversion of fair value gap. And oftentimes you don't really get that inversion of a fair value gap because of how good it is, in a sense, because it's kind of rare to form. But when you know it does form, it's very much stronger than SMT. So that's something I kind of changed going into this year, just prioritizing my confluences. But either way, I'll still take an SMT gladly. But that inversion is something I'm really looking for. Then from there, we move on to step three, which is our 5 minute continuation or retrace step. So in this case, say we inverse that 5 minute bullish and 5 minute bullish for value gap. We're not going to enter right away because you obviously expect a retrace, and that's our step three. So we're going to retrace. I normally look to mark out the equilibrium of the first bearish candle after our key level getting hit. So no, oftentimes there's always, like, when I trade, there's always an SMT that happens after my key level gets hit, and the first bearish candle, I mark out that equilibrium. I wait for price to retrace in that equilibrium level, then move on to step four, so I'm 1 minute confirmation. But just really quickly, again, we have, like, if you look at step three, we have equilibrium or the fair value gap. I really do look to prioritize an unfilled bearish fair value gap. If there's an unfilled bearish fair value gap, I'll wait for that to get hit, even if my equilibrium gets hit before that. So that's something I want to point out because I really believe that attracts more price levels. And same with the confirmation. If I have SMT, but I have an inversion, if I have SMT that's there, right, but I still have a fair value gap that's there, I'm gonna wait for price to inverse that fair value gap if it's directly under that, because I don't want, that interfering with my trade at all. So yeah, after my 5 minute continuation retrace, we're really just looking for immediately after confirmation, look for a quick retrace. Then we scale on to the 1 minute, and the 1 minute is like very similar to a kind of a 5 minute confirmation. We're just looking for inversion for value gap, a break of structure, or a triple C or change of character. Or sorry, continuation candle close. Sorry, that's triple C, continuation candle close. And oftentimes, I don't really like the continuation candle close as much as I like an inversion. Same thing, but I will still take that most of the time if my other steps 1 to 3 are lining up well. And then finally, step 5 is our targeting and entering phase. So I always enter after my 1 minute confirmation. I want to stop is below my low or my key level. I target off my. You'll see me targeting multiple TPs. So I target very large kind of ranges in price, and that's mainly because I'm trading on the 5 minute time frame and the higher time frames. Sorry, I'm getting my buys from the higher time frames and looking at higher levels. So having multiple TPs not only kind of gives me that high RR which I want, but it gives me like levels where I can just shave off partials consistently, and it's a way where it kind of hedges my emotions in the sense like where if I'm just aiming for one straight like 1 to 1.5 trade, like I could I could not hit TP and that would really mess me up. But if I have a trade with three take profits, I would hit one TP and that would in my mind it would kind of treat me as a successful trade, right? So even though that 1.5 hour like trade might go all really close to hitting my take but reverse down, I'll still count that as a loss. But on my other trade, if I have multiple TPs, so it's like it's beneficial for like taking profits in an overall more safer trade because you target more like you target a bigger range. But at the same time, it kind of gives you that mental reassurance, which is why. And my new rule, which started doing going to the New Year's, after my TP1 gets hit, I always break even my trade. And most of the time, I end up taking like at least 25% or even 50% of my partials off at that TP1. It's just dependent on the trade and how strong those levels are. So anyway, that's enough talking and talked a lot. Just kind of broke it down. We're going to go through one example here on the live charts. As you can see, this is 9:30 on July the 1st. So let's look where's the news? I don't want that. Whatever. Sorry, let's look if we have any news right now. We have 10 a.m. PMI, which is something to be mindful about. And we got Powell speaking at 9:30. Damn. Alright. So I guess we're gonna have to be aware of that. I'm not gonna trade this day just because Powell's speaking. I did not know that. I would not have traded it that day. So I'm gonna just skip ahead. The next day. Yes, there's gonna be. Alright, next day. My fault. I did not know Powell was speaking. So now we have July 2nd. So let's lock in here. So going in, let's obviously mark out our high time frame levels. So we have these relative equal lows here. That's one to be aware of. We have this 4-hour high mark out. We have these lows down here that might be draws. Just these kind of swing lows off the bullish move, swing highs. Now I go on to the 1 hour, and I just mark out levels. So we can see it might be an bullish SMT here. You never know. On the high time frames, it would be really good. I'll mark out this high just for a little bit of satisfaction. Then always on the 5 minute, you guys, if you have seen me trade before, I always mark out my London session because it gives me a sense of what the market did before hitting my New York session. So I just mark out the prime time hours of London, which is 3 to 8 p.m. Kind of how you have 9:30 to 11 for New York. These are kind of the prime time hours. I just see really manipulate anything we just kind of displace down. So now I'm curious to see what S&P did on the 1 hour. So we do look like we have SMT here, and I'm going to explain that really quickly. But I'll just go ahead and mark out my levels first. So mark out this low. Mark out this high. Mark out a couple lows down here. It's interesting here. So we had first of all, we had a high time frame SMT. As you can see, this high we just made on NASDAQ was this high we just made on the S&P, and as you can see, we closed above that. I mean that's ultimately why we had this down move. But at the same time, you can see on the 1 hour that currently on S&P 500 we're trading above these relative equal lows down here. We're going down to NASDAQ, we're below these relative equal lows down here. So that gives me immediate bullish incentive for bias. So if I'm looking at level to hit, I don't really see. So if I'm looking at a key level to be hit, we can see these relative equal lows to be hit right here. So might as well just mark this out. So we have step 1 already being our key level being hit was our 1 hour relative equal lows being hit, right? And I'm looking for a 5 minute confirmation. We can already, technically, we already say we have our 5 minute confirmation in the sense of if you look here, we have our SMT. We're below these relative equal lows on Nasdaq, but on the S&P, I mean, sorry, we're below. Yeah, we're below on these relative equal lows on Nasdaq. But if you look at S&P, we're above these lows. So that technically already have 1 and 2 done in the bag, right? This is all before market open. And if I look on the charts, we can see we're waiting for a retrace here. So what I think could happen is realistically we could just tank up and probably not. We probably might not even get an entry here. One second, I want to put my indicator on. It's not a weird. Don't worry, it's not a weird indicator. All I use is the fair value gap indicator. It just helps me. It just marks it out for me, so I don't have to really mark anything out. So we do have a retrace here of this fair value gap, which is nice. Boom. So we have our SMT retrace. Realistically, we could be looking at a 1 minute close, and I would gladly enter off market open. I don't think because we have our steps checked out. I know this kind of might not be a little unusual because the market hasn't even opened yet. But if you look at all of our steps, we have our key level being hit right there, 1 hour highs being hit, and keep in mind we have that bullish SMT in the high time frame, which is really strong. For 5 minute confirmation with that kind of that bullish that SMT kind of playing down to the lower time frames, we have the SMT with Nasdaq as you can see here. Sorry, we're below this low, right? But if I go into S&P, we're trading above that low. So we technically have steps 1 and 2, our key level and our 5 minute confirmation hit. And for 5 minute retrace, we can just see we literally have this fair value gap marked out in a perfect retrace down. It looks like we're gonna close above this candle, right? That's boom, boom. That's steps 2 and 3 done. Now waiting for that 5 minute confirmation. So obviously I'm expecting some choppiness right at market open. So I'm gonna see how that plays out. Otherwise we have no news. We had employment at 8:15, which is good in volatility. So let's see what we do in the one. Like I would really, I'm really teetering on the edge of entering right now because I do think this has a opportunity to go up. Oh my god, this girl's going on my phone. Okay, one sec. Let me lock in here. So yeah, we have the close, come down, up here. One sec, I'll be right back. All right, I'm back. So we just had this big kind of up move here, and to be honest, if we don't enter and just end up ripping above, I won't even be too mad because we can end up looking for shorts up here. But I'm gonna wait for 1 minute, like a proper 1 minute retrace, because I do think we're gonna come back down like this. Mark out this 5 minute. Still for value gaps, you can retrace, bro. Okay, I might enter up here. Nah, low key. I'm gonna just ride this high. I'm gonna wait a little more. I want to wait till we take out like some crazy highs on Nasdaq and make an SMT and just reverse it down. There, okay. Hopefully we get SMT here. Looks like we're gonna do it because let's look at S&P right now. We're just reaching these relative equal highs, right? And these are also something I would consider as a key level because look, this is London session right now. So remember I said session highs is a key level for me. So that session high being hit, that's a key level right here in S&P. And the other interesting thing is we're above, very much above this. We're even at the Asia highs technically back here. We swept out basically every high on Nasdaq. So look, even though we predicted that long move up, we say it's most likely gonna rip. I said we're fine if we don't get an entry on the retrace, which is what we wanted. We wanted a better entry. We didn't get it. I'm not even too mad about that because I literally said we're probably going to get SMT at these highs, which we literally have, and we're hitting our key levels being swept right here. So it's basically going exactly how I played out so far. I don't want to jinx myself. But now I'm really looking for like a 1 minute, like a confirmation of shorts right now. Okay, there we go. So we have a 5 minute bearish candle. So I'm going to go ahead and mark it's the first bearish candle. The first big bearish candle, so I'm gonna go ahead and mark out the equilibrium, right? And just one sec what S&P is doing. And same exact thing here. So we have this candle being marked out. So as soon as we kind of come up, retrace this candle, I will gladly enter shorts. I do think this is a lot cleaner of a position. There we go. We're up here. Ooh, looks like that's gonna be invalidated right there. Yeah, looks like we're gonna have to wait a little more. All right, come back down again. Now it's just choppy. Kind of annoying, I can't lie. No. Okay, wait. We have this 5 minute gap here that's looking to be inversed, and that's something I would look to enter off of potentially. There you go. inversion. Then we're getting that retrace up here. So I'm gonna wait for a 1 minute confirmation candle, as long as you can get a 1 minute SMT or yeah. So it's really choppy right now, but I'm still looking for shorts. Nevertheless, I'm waiting for 1 minute confirmation here. But if you close below these lows, looks like it's gonna be choppy for a while now. Damn. All right, so I'm probably done for the day, but that's kind of how this model works. Like, we didn't get the entry we wanted, and I'm totally fine with that. We kind of predicted that whole thing up though. That was just kind of like the trading knowledge, but we were looking for shorts up here. We didn't get it. This is not the best example of this model. I mean, it kind of shows where it's kind of lacking in a sense where we have to be really patient with our setups and entries. Even though we knew this was going to happen, like this immediate rip up, as you can see, there's the retrace is very limited up here. We didn't really get what we wanted, but something would look, our position would look like something like this. Maybe like you'd come up here, just target all, I would look, you kind of target all of this stuff. TP1 would be like at this high here, then I would, nah, TP1 would be like these highs up here, actually, these relative equal highs. And break even immediately, probably take out 25%, and majority of my position would close up here, and then I would just let some floaters up here. But we didn't enter, not too mad at that. We did show, like, we did kind of predict that move up, and we unfortunately could not wait for long shorts. I still want to see how this would play out if we end up dumping. So I'm curious to see. I'm just gonna speed this up over like an Asia session. Like, we're just choppy for the rest of the day. It's kind of annoying, but fortunately, we didn't get what we wanted. We didn't lose any money, but we didn't enter at the same time. So I just kind of walked through the model, and I'll be back probably tomorrow with another model video, so we can be locked in on that. But apart from that, I'll catch you guys in the next video. We can hopefully get an actual entry next time. But apart from that, I'll see you guys in the next video.